Hello everyone, Nick Shaheen here looking at Canopy growth. CGC is the ticker. I haven't done a video on that one in a while. The last few were spot on as far as levels. They were like almost minutes before the breakout or the breakdown, and call it lucky, call it whatever it is. Let's do it again. All right, so let me see the lines I had on it last time. Okay, so it shows you like probably last time I did the video was probably a month ago. So we had a tight situation, and I didn't know which side was going to win, but I knew what was going to happen if one side broke away one way or another. So the upside potential came to fruition. That was the target, and then some. What happened since then? The important part of what happened since then is the fact that the bottom also played out kind of, but it's good news for the bulls. I'll tell you why in a second. So disappointing, yeah, but if you didn't book up here, I don't know, then your time frame must be long, and you shouldn't really watch this video because nothing is going to change your mind after a huge rally. If you don't book profits, that means you're not trading, you're just investing for the super long term. So the minute to minute doesn't really matter, and this is not so much minute to minute, but if I went long and I get 10% in days, I usually book it, or at least lock it. How can I lock it? If I bought shares, I can sell calls against those shares, covered calls, not naked calls. If I own calls, I can turn them into spreads. Similar concept. So I don't increase any risk, I just limit my potential upside by locking some profits. And as far as why this is important, and this is good news because it happened twice and it didn't happen a third time, and we have a series of higher lows. So that tells me that the buyers are in charge of the price action, even though we're kind of like hitting a roof. I'm sure if you go far enough, you'll see that it's lower highs. But we have more higher lows than recent lower highs. So I would pay attention to the roof versus the higher lows. So we have an ascending bull gaining steam, attacking the same fail points. Neckline, neckline, neckline. And then they eventually have to either break through it or, look, GBTC. So somebody from the chat room wants to talk about it, so we'll go check it out in a little bit. The idea is, after so many tries, the bears are going to be tired of defending this stupid line, and then if the bulls prevail, then they'll overshoot higher. How much higher? Usually by the width of the battle zone. I'm sure there are some technicians out there that can give you specifics. To me, I look left and see where is likelihood going to be some resistance. There's going to be some level of resistance here from prior behavior that I've seen, and if they can overcome it, there's probably going to be some resistance here. So this is realistically as far as they can go. So what do? How do I trade this? I buy the dips to see if they can rip through to and through. So if I'm not long and I'm looking to get long and the chart is right here, I don't buy it because it's approaching a prior fail point and onus is on the bulls to break out of it. I would buy the breakout. So if I bought it here, I made a mistake. If I bought it anywhere here, I made a mistake. If I bought it here, made a mistake, but not as egregious as these because this one served as an example, but nevertheless this was a fail. This is a big gap and it's very enticing, but gaps this big on earnings have a reason. It's not like one day we woke up and it was down. We were down for a reason, for whatever the hell they said here. So they're not likely to erase it without an opposite reason. So look at it as it's building an inverse head and shoulder-ish pattern. That's why the neckline is important to take out. Can they last? Can this coincide with it? Like can they do this and then earnings come and then they say the opposite of whatever they said here and break out? That's a possible situation. So it's still early enough in this process to warrant buying something into it, and I would use calls out in time or shares. I don't mind that. I would probably prefer selling puts on a bad day against this proven support. That's my style. Only if I wanted to own shares. So the levels favor the bulls here, but there's no actual trigger here. There's a swing trade attempt, and the closer it gets to this line, the less likely I'm I am to buy it. So if I don't decide to get on board until here, it means I'm hesitating too much and I'm not using the charts, because this is a proven fail point, just like this is a proven bounce point. So they're going to ping pong until one of these two lines breaks. If this breaks, they overshoot up. If this breaks, they overshoot down. There's enough, it's close enough to earnings that they may do it at earnings. So they might ping pong another one up here, but they don't have time to come back down here. So my guess is that it meanders up into the earnings and then boom, they try to break out. All depends on what they say. I have no idea about their fundamentals. All I know, last time I checked, their valuation had gotten a lot more in line. So I'm looking at, this is the best of the best, so-called. They still lose money, and their price to sales is 20. So the stock price has 20 years worth of sales built into it. It's high, but it's nowhere near the highs they used to have. In fact, Zoom now has the highs that they used to have, over 100. So these guys have gotten more realistic with their expectations. Like, this is less than Nvidia as far as what the investors are willing to pay now for the stock versus its full year sales. So if I buy shares right now, I'm accepting that I'm paying the owners of this company 20 years worth of their sales today for the privilege of owning their shares. That's a lot of hope, but a little bit less than Nvidia, or thereabouts, as much as Nvidia, twice as much as AMD, just to give you absolute comparisons. Okay, so you think of Amazon as expensive. It's 5 times more expensive than Amazon from that perspective here. Amazon's price to sales is like under 6, 5 and change. It was 3.5 not too long ago. So that's the hopium. And this is supposedly a growth stock. And so profitability, it shouldn't be concerned. That's why I didn't talk PE. It still loses money. So I don't need to talk profitability. Their job is to grow. They're establishing a whole new arena that is still illegal in the United States. So they need that headline. They need not the headline of it being legal, but to talk about it. Nobody's talking about legalization at the federal level anymore. At least not in my circle, at least not on CNBC. So it needs to surface again. Maybe the experts that track pot stocks, but not out in the open. Anyway, I think this is enough. I don't need to look at a different, this is it. I used to track ACB, but and then they reverse split, and that just whacks out the chart. So we're here. We'll talk about it. If this was wrong, and if this was wrong, somewhere in the middle lies the truth. Here we are. So too late to short it. If somebody wants to go long it here, I can't say they are crazy, because a lot of the froth has been played out. Do they have earnings sometime soon? I can imagine. And it will move with CGC. So the range is tighter and tighter and tighter, and this descending wedge is going to break out at some point. The first step is to find stabilization where you stop making lower lows, and there's nothing evident in the chart to say that yet. And it's approaching, these candles are really wacky. It's very misleading here. You can't use any of these candles for much. Probably this set of candles is more telling in this. So if I draw a line from here, we're in that zone. I don't mind going, I'm not afraid going long here with a tight stop. And the stop depends on personal preference. There's a good line of support down here. Yeah, there's a gap here, but not every gap gets filled. And this would need a really serious bad message from somebody somewhere to get that. Okay, Nick signing out.